Now the markets are up. The Dow, NASDAQ, S&P, they're all green. But the bad news, it continues. Home Depot, they reported their earnings. And again, retail revenue, it came in soft, less than expected. Foot traffic, that was down 1.8%. And the average ticket price, that also dropped. What consumers are spending, that dropped. And this is on and on, a continuous theme that we've seen from many U.S. retailers over the past year. And I don't believe that's going to stop. It's going to get worse as more people are laid off and those credit card balances increase. You're going to see more people curtail their spending. And what we're going to be left with is just a small segment of this country that's going to be freely spending. Basically, they're going to be the only segment that's going to be holding up the rest of this economy. And how long that can continue, that's going to be the $64 billion question. Now, yesterday evening, we had Freight Car America, and this company manufactures rail cars, and they actually saw a strong quarter, more orders and more revenue. And I like to look towards the railroads to get a barometer and a feel of this economy. And this is good news in a sea of bad news. Now, the railroads, they aren't going gangbusters, but to know that they're ordering more rail cars is a good sign. Now, the layoffs, they continue. The factories and plants closing, it continues nonstop. And again, this country is going to be in big trouble if this continues. And I believe it will. It'll only get worse. The layoff numbers, they seem to be getting larger and more frequent. And this is supposedly when this economy is doing good. And you put that together with rising credit card balances, more people getting behind on their credit cards, it's not going to end well. Now, it's going to take some time, a few more months before this wave crest comes over and envelops the nation. So you're still going to have positive and good news dominate the media circuit. But as we march closer to that election, they're not going to be able to hold this damn back. Now, we've seen commodities tick up in the last few sessions. We've seen oil creep back near $80 a barrel. Gold is back over 2,500, breaking new records, and that's only going to head higher. Now, remember, gold is a barometer of inflation, and the higher it goes, the more the flashing signs that inflation is increasing. Now, we had the PPI report come in this morning, the wholesale inflation report, and that shows inflation is still increasing, but less than expected. And that measure rose 0.1%. Now, year to year, that metric actually rose 2.2%. And that's a sharp drop from the 2.7% reading last month. Now, the rest of the commodity market is pretty quiet, and this market's green, and it's probably going to remain green. This quick stock market commentary, please like and subscribe.